So what is going on with the Grand Rapids real estate market? I mean, it is sending some seriously mixed signals. You look at the numbers, and they seem to be telling two completely different stories. So today, we're going to unravel that paradox, and we're going to let the data do all the talking.
Okay, so at the very heart of this whole thing is this number, $350,000. Now, as of August 12, 2025, that's your median list price for a single-family home in Grand Rapids. Seems simple, right? But believe me, the story around that number is where things start to get, well, pretty complicated.
And that brings us right to the big question, the one everyone watching this market is asking. Is it heating up, or is it cooling down? And the really confusing part? The data, well, it kind of seems to be pointing in both directions at the exact same time.
So take a look at this. This is that contradiction in black and white. On the one side, you've got all these signs of cooling, right? Prices are flattening out, and get this, more than a third of sellers are actually cutting their asking price. But then you look at the other side, and it's still called a strong seller's market. The typical house is selling in just 21 days. So how can both of those things be true at once?
Okay, so to make sense of all this conflicting info, we've got to look beyond just these individual signals. We need something else. We need a single metric that can act like a pressure gauge for the entire market. Something that's going to tell us what's really going on.
And that tool is called the Market Action Index, or the MAI for short. It's designed to do one simple thing: answer the question, how is the market? And it does that by creating a single score that perfectly balances two supercritical forces: how fast homes are selling versus how many homes are actually for sale. This is the key. This is how we're going to decode this whole paradox.
All right, so here's what our pressure gauge, the MAI, is telling us right now. You can see the index has dropped a little bit, from 67 down to 63. Okay, so that explains those cooling signs we were just talking about. But, and this is so important, a score of 63 is still way, way deep in strong seller's market territory. So yeah, the pressure is eased up a bit, but it's still incredibly high.
Okay, so now that we have our trusty pressure gauge, we can go back and look at those other trends. You know, prices, inventory, how fast things are selling, and we can see how they all fit into this bigger picture. This picture of a market that's cooling off, but is somehow still really hot.
So first up, prices. After a pretty wild ride of rapid growth, the data is showing that home prices have kind of hit the brakes. They've stopped climbing and have basically flatlined, at least for now.
Yeah, this timeline really tells the whole story. You can see after a really volatile year where prices just shot up to almost $370,000, they've now kind of settled down. For the last several months, the market's just found its new comfort zone, right around that $350K mark. So that crazy climb, it seems to be over. We're on a plateau. So the big question is, are prices going to stay on this plateau? Well, this is exactly where that market action index becomes so useful as a leading indicator. The source material is really clear on this. We have to watch the index. If that number starts to tick up again, prices will probably follow. But if it keeps easing off, this plateau could turn into a decline. All right, let's look at another piece of this cooling puzzle: inventory. The number of homes for sale, it's ticking up. Now, on the surface, you think, hey, that's great news for buyers, right? Well, not so fast. The data actually warns us that just because inventory is rising, it doesn't automatically mean the market is getting weak. It only really matters if buyer demand isn't keeping up. And as we already know from our pressure gauge, that MAI, buyer demand is still so strong that it's absorbing all this new inventory without even breaking a sweat.
And you know, if you need any more proof of just how intense that demand is, here it is in one number: 21. Just 21 days. That is the median number of days a house in Grand Rapids actually sits on the market before it's sold.
I mean, just let that sink in for a second. Half of all homes listed are going under contract in 3 weeks or less. That incredible, blistering pace, that's the engine that's keeping the market action index so high, even with more homes for sale and prices leveling off. It's just proof of how many buyers are still out there ready to pounce. Okay, so up to now, we've been talking about the market as this one big, single thing. But that's not the whole story. It's more like different neighborhoods. The market behaves very differently depending on if you're looking at, say, a $200,000 home or a $700,000 home. Okay, I know, this slide has a lot of data on it. We're breaking the market down into 4 different price tiers. But don't get overwhelmed, don't worry about memorizing it all. I want you to focus your eyes on just one column, that very last one, DOM. That stands for days on market. Just look at those numbers and see if you can spot the pattern. Did you see it? It's pretty stark, right? Here's the pattern pulled out so you can really see it. The difference is just staggering. Homes in those middle tiers of the market, they are flying off the shelves in only 14 days. But you go up to that most expensive tier, and they're sitting for 49 days. It's like a completely different universe at the high end.
So why should someone looking for a mid-range house care about this? Why does it matter to everyone else? Well, because, as the source material points out, the high-end market often acts like a canary in a coal mine. A slowdown in the priciest homes is often the very first signal of a bigger, broader shift that could eventually ripple down and affect every single price point.
All right, so we've looked at the paradox, we've looked at the trends, we've sliced the market into different tiers. So what's the bottom line? What should you really be watching for? Let's boil it all down into the key takeaways.
Okay, here's what you really need to remember. Number one, Grand Rapids is in a market that's cooling off, for sure, but it is still a very, very strong seller's market. Number two, that market action index, the MAI, that is the best pressure gauge you have to see where things are headed. 3, demand is still fierce, especially for homes under about $500,000. And finally, number 4, keep a close eye on that high-end market. That slowdown there could be the early warning signal for everybody else.
And all of this leaves us with one final, and I think crucial question. We see the data, we know high-end homes are slowing down first. So, is this just a little quirk of the luxury segment? Or is this the first crack in the foundation? Is this the signal of a much broader shift coming for the entire Grand Rapids market? The data has given us the question. Now it's up to us to watch and wait for the answer.